Well, NZ Capital Strategies was established to initially simplify the allocation and management of our own proprietary capital. The firm has since expanded into the areas of venture capital private equity, absolute return funds and real estate. The focus of the firm is really to provide offshore investors access to quality New Zealand investment opportunities which are a little bit outside the norm of what people might see every day. The Aoraki Fund allocates to leading New Zealand absolute return managers. The portfolio is primarily split into three key components. One is equities, commodities and protection. So the portfolio is designed to perform in all market conditions, and indeed the past performance of the portfolio, which has been tracked and compiled by Ernst & Young since the middle of 2007, has been remarkably robust in the previous market conditions.
I is a small cap Australasian specialist, so we specialise in companies in Australia and New Zealand with a market cap of around 50 to 500 mil, and our strategy focuses on companies that are under the radar, and typically those companies have little or no coverage from brokers and are often contrarian investments. What we find is that companies that are small and undervalued are often inefficiently priced by the market. Therefore, Pi can buy those companies at a deep discount to what we perceive as an intrinsic value. And as those companies grow their earnings and start to attract more attention and become above the radar, they're picked up by brokers. So we get the double effect of a growth in earnings, growing earnings per share, and also an increase in coverage, which expands the PE ratio. So there's two hits to increase the price.
The other manager is Mike Gibbs-Harris. He's involved in running international equities from his base here in New Zealand.
It's a long-only fund. It invests in global equities to try and deliver a real return in US dollars. The fund's been going for 7 years. We've been compounding at 11% over that period. That's significantly better than most of the indices have done over that time. We compare the returns that we think are available on equity markets to the risk-free rate, either interest rates on cash or interest rates on government bonds. And when we think that the equity markets are underpriced, then we'll go in and invest there. I think that the MGH investment fund for an international fund has a completely different type of geographical exposure from what you'd expect from a normal international fund. And when you overlay that with a value approach, you get fairly low risk but very decent returns.
Kohinoor can be described as a best ideas fund. What we try to do with Kohinoor is to basically find cheap options which have multiples of 5 to 10 times payoffs. And that's very, very important. And the way we do that is by using what we call a quadrivium process, which is a 4-factor process. We look at implied volatility, we look at simple technicals, we look at sentiment, and we look at fundamentals. And we put those all together, we rank them, and if that combines with a payoff that is a minimum of 5 times the initial premium spent if it is successful, then we will.
Mark Sleeman through MS Capital Management also runs a systematic CTA.
The strategy is designed to catch long-term moves in the futures markets, or basically large moves either up or down across exchange-traded futures. It's very long-term. Generally it has an average holding period of 100 days, and occasionally it will hold a position for up to 4 years. Nowadays, a commodities trading advisor, and particularly MS Capital Management, will trade markets in currencies, interest rates, energies, grains, meats and metals.
We saw double-digit returns for every full calendar year of performance, and indeed the portfolios had positive performance in 2007, 2008, 2009 and 2010.